Wire is brought to you by Resora. Elevate your real estate marketing with Resora. Effortlessly design, manage, and automate stunning email and social campaigns with our intuitive platform built for real estate. Say goodbye to complex marketing. Get started with your free account today at Resora.com. And by Notebook LM by Google. Unlock the power of your information with Notebook LM. Upload your documents and instantly access an expert AI that answers your questions, summarizes key points, and generates insights, all based on your specific sources. Become a knowledge master with Notebook LM. Try it now at notebooklm.google.
Welcome back, everyone. We're diving into some pretty big real estate headlines this week.
Yeah, looks like we've got a lot to unpack.
For sure. We've got surging pending home sales, but mortgage rates are still kind of all over the place.
Yeah, they've been pretty unpredictable, that's for sure.
Absolutely. And on top of that, there's some serious drama going on with NAR membership.
Ooh, yeah, that's been making headlines.
So let's get right into it. What really stands out to you in all of this?
Well, that jump in pending home sales is pretty eye-catching, wouldn't you say?
Definitely. Hitting a 21-month high in November.
Right.
And after 4 straight months of increases.
It seems like something's shifting in the market.
It does, doesn't it? Almost feels like buyers are starting to accept that.
Yeah.
Those crazy low mortgage rates we saw a few years ago.
Right.
They're probably not coming back anytime soon.
It's like everyone was holding their breath, waiting for rates to plummet again.
Totally.
But now it seems like they're realizing that might not happen, at least not anytime soon.
Exactly. And especially with existing home sales going up, like they are, 5% annually.
Right.
And with almost 18% more homes on the market compared to last year, it feels like buyers finally have a little more leverage.
A little breathing room.
Yes.
Exactly.
Yeah.
More inventory, more options, more power to negotiate.
It feels like we're finally moving away from that super intense seller's market.
Right. It was getting a little crazy there for a while.
It really was.
Like Lawrence Ian, the chief economist over at NAR, said, buyers are finally in a stronger position to negotiate.
It's about time. But yeah, let's face it, those mortgage rates have been...
Oh, tell me about it.
A wild ride. All those head fakes where it seemed like rates were dropping.
Yeah.
And then suddenly they'd shoot right back up.
Oh, yeah. Those head fakes really messed with people's expectations.
For those who maybe aren't familiar with the term, a head fake is basically when an indicator, like mortgage rates in this case, seems to be moving in one direction. But then, bam, it suddenly reverses course.
It can really throw people off, especially if they're trying to time the market just right.
It's been a tough year to predict what's going to happen next.
Absolutely. Remember at the beginning of the year when everyone was feeling optimistic?
Yeah.
You know, with rates stabilizing around 6.6%?
Yeah, 6.6% felt good.
And then, boom, by May, they were up to 7.2%.
It was a bit of a reality check.
It really was.
But here's what I find interesting.
What's that?
Despite all the rate volatility, we're still seeing a lot of activity in the market.
Yeah, that's true. Existing home sales and new construction are both up year over year.
So it seems like people are still buying homes.
Yeah.
Even with higher rates.
They are.
It makes you wonder.
What about those of us who aren't necessarily looking to buy or sell right now, but maybe thinking about refinancing?
Yeah, that makes sense. Earlier this year, when rates dipped, there was a lot of talk about refinancing.
Exactly. Everyone wants to lock in a lower rate, right?
Of course. Save money on those monthly payments. And we did see a noticeable increase in refinancing activity.
Oh, yeah.
Volume went up by like 27% compared to last year.
That's significant.
But it's still nothing like the refinance frenzy we saw back in 2021.
Oh, 2021. Those were the days.
Right. Rates were at historic lows.
It was a refinance party. Everyone was jumping on board.
Seriously.
Yeah.
Refinance volume hit a whopping $2.2 trillion that year.
Crazy, right.
But as rates have climbed, things have definitely slowed down.
For sure.
So is now a good time to refinance?
That's the million-dollar question.
Right.
CoreLogic did a study, and they found that there's a pretty clear inverse relationship between mortgage rates and refinance activity.
So basically,
when rates go down, refinancing goes up.
Makes sense.
Simple as that.
So if rates keep dropping in 2025, like some experts are predicting, could we see another surge in refinancing?
It's possible, but we've also seen how quickly things can change, haven't we?
We have.
It's a gamble.
It is. Do you go for it now? Or do you wait and see if you can snag an even better rate later on?
That's the dilemma.
And you know what else might be making people hesitate about refinancing?
What's that?
All the drama happening over at NAR.
Oh, right.
Membership has dipped below 1.5 million.
Yeah.
And it's not just because of a slower market.
There's definitely some discontent brewing.
Yeah, there's a lot of chatter about
Yeah.
NAR's policies,
Right.
Yeah.
Like the whole mandatory membership thing.
Exactly. Some agents are feeling like they're being forced to be members.
Right.
Even if they don't agree with everything NAR stands for.
It's a valid concern.
It is. And then, of course, there's the clash between NAR and Phoenix Realtors.
Oh, yeah. The MLS Choice program.
That's causing quite a stir.
It's really interesting.
It is.
Because it gets at a much bigger issue.
Okay.
Mandatory membership and access to the MLS.
Right, right.
Phoenix Realtors wants to give agents more flexibility and more choice. They're saying agents should be able to access MLS data without having to be full-fledged members of NAR.
Okay.
Which makes sense to me.
Yeah, I can see that.
But NAR's not too happy about it.
No, they're not. They see it as a threat to their traditional model.
Yeah, it's definitely causing some friction.
A lot of friction, especially after December.
Oh, yeah.
We saw the biggest monthly drop in membership in almost a year.
Over 25,000 agents left NAR in December alone.
Wow. It really feels like a battle between the old guard and the new guard.
Right.
NAR trying to hold on to its power while agents are pushing back, demanding more freedom and more options.
It's like a tug of war, you know?
It really is.
Yeah.
Makes you wonder what the future holds for NAR.
Yeah.
And the real estate industry as a whole.
It's a crossroads, that's for sure.
It is.
And it's not just about membership numbers.
Right.
It's about how the industry adapts to the changing needs and expectations of both agents and consumers.
Really important point.
Yeah.
So you're saying it's not just about how many members NAR has?
Right. It's bigger than that.
Okay.
It's about how the industry as a whole is evolving and changing.
I see what you're saying.
Yeah, it's about staying ahead of the curve, being innovative, and being responsive to what people actually want and need.
That makes sense.
Yeah.
So if NAR loses members, and maybe some of its influence, could that actually lead to changes that end up benefiting buyers and sellers?
Now, that's a thought-provoking question. Change can be scary.
It can.
But sometimes it's absolutely necessary for progress.
I agree. And speaking of change, there's another trend we need to talk about that's really shaking things up.
Okay.
Modular construction. Seems like it's finally gaining some real momentum.
Yeah, it's definitely having a moment.
It is, especially with all the focus on sustainability and climate change these days.
It makes a lot of sense when you think about the environmental impact of traditional construction.
Oh, yeah, for sure.
I mean, concrete production alone accounts for 8% of global CO2 emissions.
Wow.
And then you've got steel production, another 7%.
Plus all the waste generated on those construction sites.
Exactly. It's a lot to consider, especially when you think about the increasing frequency and intensity of extreme weather events these days.
Right, like Hurricanes Helene and Milton. Remember all the damage those caused?
Absolutely. Traditional homes just aren't built to withstand those kinds of forces.
We're not. And that's where modular construction comes in.
Right. These homes are built in factories.
Yeah.
Which means less waste and more efficient use of materials.
That's a big plus.
It is. And they can be designed to be incredibly resilient.
Okay.
Able to withstand high winds, heavy snow loads, even earthquakes.
Wow. That's impressive.
It really is. And if we're talking about resilience, we can't forget about financial resilience, especially in today's market.
Absolutely not.
Chris Anderson, the CEO of Vantem, he pointed out that developers can save up to 20%.
Really?
On building costs by using factory-built methods.
That's huge.
It is. And it makes modular construction even more attractive in a market where affordability is a major concern.
It is a major concern.
And then there's the potential for accessing new funding avenues like green financing, which can be a game changer for developers.
It sounds like modular construction could be a win-win for everyone.
It really does. Developers, homebuyers, and the planet.
I like it. And speaking of wins, NAR just released their predictions for the top housing markets for buyers in 2025.
Oh, predictions. I love predictions. What are they saying?
Well, they've identified 10 markets that they believe are going to outperform the rest of the country in terms of sales growth next year.
Interesting.
They're looking at affordability, job growth, population trends, and stable mortgage rates as key factors.
Makes sense. No surprise that affordability is at the top of their list.
Right. even with the market showing signs of recovery.
Yeah.
High home prices are still a major obstacle for a lot of buyers.
Absolutely.
Some of the markets on their list, like Hartford, Connecticut, and Indianapolis, those are known for their relatively affordable home prices.
Yeah, Hartford has become quite a hub for young professionals.
Really?
Yeah, and families looking for more space and a lower cost of living.
That's cool. And what about Indianapolis?
Indianapolis is attracting a lot of businesses and remote workers.
Okay.
It's a growing city with a vibrant cultural scene.
Sounds like a good place to be.
It does, doesn't it?
So it's not just about affordability.
No, not at all.
NAR is also looking at things like population growth and job creation.
Right, as indicators of a healthy housing market.
Got it. So places like Charlotte, Greenville, and Phoenix, they're seeing a lot of people moving in.
Which drives up demand for housing.
Makes sense.
And then there's Knoxville, Tennessee.
Knoxville.
Yeah. Apparently it's a bit of a hidden gem.
Okay.
About 50% of people moving to Knoxville are buying homes.
Wow, that's a pretty high percentage.
It is. Says a lot about the appeal of the area.
It does. It's really interesting to see such a diverse mix of markets on NAR's list.
I agree.
It suggests that there are opportunities for buyers and investors across different regions and price points.
There are. But even with these positive predictions, there's still a sense of uncertainty in the air.
Oh, for sure. We're seeing some conflicting signals from the market.
We are.
On the one hand, you've got rising inventory levels, which is usually a good sign that the market is shifting in favor of buyers.
Right.
But on the other hand, those rising inventory levels aren't necessarily translating to lower prices.
That's the problem.
Right. A Redfin report found that a lot of those new listings are what they're calling stale.
Stale.
Yeah, meaning they're just sitting on the market for longer periods of time.
Oh, I see what you mean.
So sellers are still holding out for top dollar, which keeps prices high and makes it tough for buyers to afford a home.
It's a tough situation.
It is. It creates this weird dynamic.
How so?
Well, you have more homes to choose from,
Right.
but you still can't afford them.
Yeah, I get it.
And that's having a ripple effect on the rental market, too.
Oh, how so?
Well, another Redfin report found that renters are staying put for longer because it's simply more affordable to rent than to buy in a lot of areas.
Makes sense.
It's like this catch-22 situation.
How so?
High home prices are pushing people into the rental market, which then drives up rental prices.
Right.
And that makes it even harder for people to save for a down payment.
It's a vicious cycle.
It really is.
Yeah.
So how do we break this cycle and make homeownership more accessible? What are your thoughts?
That's the big question, isn't it? A lot of people are hoping that mortgage rates will stabilize around 6% in 2025.
Yeah, 6% seems to be the magic number that everyone's talking about.
Right, but the question is, will lower rates be enough to truly unlock the market?
Right.
Or are there deeper, more structural issues at play that need to be addressed? It's something a lot of people in the industry are grappling with right now.
It's a complex issue with no easy answers.
Exactly.
But before we dive into NAR's predictions for homebuyer trends in 2025, we're going to take a quick break. Sounds good.
Don't go anywhere. We'll be right back.
Hey there, thanks for tuning into The Wire. If you're enjoying the show and want to help us keep bringing you the latest in real estate, visit us at thewire.fm and click the Support the Wire button in the main navigation. Your support makes all the difference. Thank you. Now back to the show.
It makes you wonder if we're going to see more local realtor associations kind of follow Phoenix's lead and challenge NAR's authority, you know?
It's a good question. What do you think that would mean for the consumer?
That's a big one.
Right.
Like, if NAR's membership keeps shrinking and their power weakens, could that actually lead to changes that benefit buyers and sellers? It's definitely something to think about.
For sure. Change can be a little scary.
It can be, yeah.
But sometimes it's what we need.
Absolutely. Sometimes it's necessary for progress.
Right. And speaking of change in progress.
Oh, yeah?
We need to talk about modular construction.
Okay, modular construction.
It seems like it's finally gaining some real traction.
It does, doesn't it?
Especially with all the focus on sustainability and climate change.
Yeah, it makes sense when you think about the environmental impact of traditional construction.
It's a big issue. It is. I mean, did you know that concrete production alone accounts for...
Oh, I know this one.
8% of global CO2 emissions? That's a lot.
It's crazy. And then you add in steel production on top of that.
Right. Another 7%.
Plus, let's not forget about all the waste generated on construction sites.
Exactly. It all adds up.
It really does. Especially when we're facing more and more extreme weather events.
That's right.
Like Hurricanes Helene and Milton last year. Remember those?
Yeah, those are bad.
All that damage.
It's crazy to think about.
Traditional homes just aren't built to withstand those kinds of forces.
They're not. And that's where modular construction comes in.
Exactly. These homes are built in factories, right?
They are.
So less waste. More efficient use of materials.
Exactly. Plus, they can be designed to be so much more resilient.
Okay, tell me more about that.
Well, they can withstand high winds,
Okay.
heavy snow loads,
Wow.
even earthquakes. They're built to last.
That's really impressive. And, speaking of resilience, we can't forget about financial resilience, especially in this market.
Absolutely. That's a huge factor these days.
It is. And Chris Anderson, the CEO of Anthem.
Oh, yeah, I know him.
He was saying that developers can save up to 20%
Wow, really?
on building costs by using factory-built methods.
That's significant.
It is. Makes modular construction even more attractive, right?
Especially in a market where affordability is such a big concern.
It is a major concern.
It really is. And then there's the potential for new funding avenues, too.
Like what?
Like green financing, for example. That could be a game changer for developers. It really is.
So it sounds like modular construction could be a win-win-win.
I think so.
For developers, for home buyers,
right,
and for the planet.
Exactly. We love a good win-win-win, don't we?
We do. Okay, shifting gears a little bit here.
Okay.
NAR just came out with their predictions for the top housing markets for buyers in 2025.
Oh, yeah. Always love a good prediction. What are they saying?
Well, they've identified 10 markets.
10?
Yeah, that they believe are poised to outperform the rest of the country.
Okay.
In terms of sales growth next year.
I'm all ears. Tell me more.
Okay, so they're looking at affordability, of course.
Of course.
Job growth, population trends,
right,
and stable mortgage rates as key factors.
Makes sense. Affordability is always going to be at the top of the list.
It has to be, right?
It does, especially with home prices being as high as they are.
Even with the market showing some signs of recovery.
Yeah, it's still tough out there for buyers.
It is. So some of the markets on their list, like Hartford, Connecticut, and Indianapolis, those are known for their relatively affordable home prices.
Yeah. Hartford's become a pretty popular spot.
Really?
Yeah, especially for young professionals and families.
Okay.
People are looking for more space and a lower cost of living.
Makes sense.
It does. And Indianapolis is another good one.
What's happening in Indianapolis?
They're attracting a lot of businesses and remote workers.
Okay.
It's a growing city with a cool vibe.
Sounds nice.
It is.
So it's not just about affordability.
No, not at all.
Right. NAR is also looking at population growth and job creation.
Those are big factors.
They are. So cities like Charlotte, Greenville, and Phoenix, they're seeing a lot of people moving in.
Which, of course, drives up demand for housing.
Right. Supply and demand.
Exactly.
And then there's Knoxville, Tennessee.
Knoxville. That one surprised me.
Me too.
But apparently it's a bit of a hidden gem.
Interesting.
About 50% of people moving to Knoxville are buying homes.
Wow. That's a pretty high percentage.
It is. Says a lot about what the area has to offer.
It does. I love that there's such a diverse mix of markets on NAR's list.
Me too.
It shows that there are opportunities for buyers and investors all over the country at different price points.
Absolutely. But even with all these positive predictions, there's still a lot of uncertainty out there.
Oh, for sure. It feels like we're getting mixed signals from the market.
We are. On the one hand, inventory levels are going up.
Right.
Which usually means that the market is shifting in favor of buyers.
Right.
But then on the other hand...
What's the other hand?
Those rising inventory levels aren't necessarily leading to lower prices.
That's the problem, isn't it?
It is. It's frustrating for buyers.
It is. I was reading a Redfin report, and they were talking about how a lot of those new listings are what they're calling stale.
Stale listings.
Yeah, basically they're just sitting on the market for longer periods of time.
Oh, I see what they mean.
Sellers are still holding out for top dollar.
They're not budging.
Nope. Which... keeping prices high and making it really tough for buyers.
That's a tough situation.
It creates this weird dynamic.
Yeah. How so?
Well, you have more homes to choose from.
Right.
But you still can't afford them.
I get it.
And this is having a ripple effect on the rental market, too.
The rental market. How so?
Well, another Redfin report found that renters are staying put for longer.
Interesting.
Simply because it's more affordable to rent than to buy.
In a lot of areas, yeah.
Right. It's like this crazy catch-22.
Yeah, explain that.
Well, high home prices push people into the rental market.
Okay.
Which drives up rental prices.
Right.
And that makes it even harder for people to save for a down payment.
It's a vicious cycle.
It really is. So the big question is, how do we break this cycle? How do we make homeownership more accessible? What do you think?
That's the million-dollar question. A lot of people are pinning their hopes on those mortgage rates stabilizing around 6% next year.
Yeah, 6% seems to be the magic number everyone's talking about.
It does, doesn't it? But the question is, will lower rates be enough to really unlock the market?
Or is there more to it?
Exactly.
Yeah.
Are there deeper, more structural issues that need to be addressed?
That's what a lot of people in the industry are trying to figure out.
It's complex, that's for sure.
It is. But before we get into NAR's predictions for homebuyer trends in 2025, let's take a quick look at something else that caught my eye.
Okay, what is it? Homebuyer trends in 2025. Let's hear it.
Yeah, NAR's got some pretty interesting predictions.
Okay, I'm ready.
One that really surprised me is the rise of all-cash buyers.
All cash? Really?
Yeah, and it's not just like super wealthy investors anymore.
Interesting.
It's everyday buyers using their savings or investments.
Oh, wow.
Or even tapping into home equity to make those all-cash offers.
That's a big deal.
It is. I mean, 26% of home sales last year were all cash.
26%. Wow.
And a lot of those were repeat buyers, too.
So they're using the equity from their previous homes.
Exactly. It gives them a real edge in a market where bidding wars are still pretty common.
Yeah, it definitely does. But what about first-time buyers?
That's the tough part.
Right. How are they supposed to compete with that?
It's a real challenge. And it kind of ties into another trend NAR is predicting.
Okay, what's that?
The age of first-time buyers is going up.
Oh, interesting.
The median age now is 38.
38. Wow, that's the highest it's ever been.
It really highlights the financial hurdles this generation is facing.
Yeah, it's taking longer to save for a down payment these days.
Especially with rising home prices and student loan debt.
Absolutely. Plus, you've got inflation and the rising cost of living on top of that.
It's tough out there.
It really is.
Yeah.
It's not just about saving for a down payment either.
Right.
A quarter of first-time buyers are relying on gifts or loans from family.
Yeah, family support is becoming crucial for a lot of people.
It really is. It's a sign of the times, you know?
It is. But it also raises some concerns about the growing wealth gap.
Yeah. It's not a level playing field out there.
And the challenges of achieving homeownership for those who don't have that family support.
Absolutely. It's something we need to be talking about.
We do. But on a slightly more positive note,
Okay.
NAR is predicting an increase in multi-generational households.
Multi-generational, like families living together.
Exactly.
That's interesting.
It makes sense, though, right?
Yeah, I guess so.
With affordability being such a challenge.
It's a way to pool resources.
Exactly. And it can be a really smart financial strategy for families.
Especially in expensive housing markets.
Absolutely.
And it's not just about the money either.
Right.
It can be a way to strengthen family connections.
Yeah, provide support for aging parents.
Or a place for young adults to move back in and save some money.
It's a win-win for everyone involved.
I like it.
Yeah.
So what's the last prediction?
This one really stood out to me.
Okay, lay it on me.
They're predicting a continued rise in single women buyers.
Single women. Interesting.
Yeah. They're becoming a real force in the housing market.
They are. They made up 24% of home buyers last year.
Compared to just 11% for single men?
That's a big difference.
It is.
It shows how much things are changing, you know?
It really does.
More women are financially independent, and they're choosing to invest in home ownership.
On their own terms.
Exactly. It's pretty empowering.
It is. So as we wrap up this deep dive,
Yeah.
what are the key takeaways you think listeners should keep in mind?
Well, I think the biggest takeaway is that the real estate market is always evolving.
It's true. There's always something new happening.
There is. There are challenges, there are opportunities, and those who stay informed and adapt,
Yeah.
they're going to be the ones who succeed.
Absolutely. We've seen how buyers are finding creative ways to navigate higher mortgage rates.
We have. And how innovation is changing the game.
Like with modular construction.
Exactly. And demographic shifts are reshaping the market.
It's a lot to keep up with.
It is. But that's what makes it so exciting.
I agree. As we head into the new year,
Yeah,
remember that staying informed is key.
absolutely.
Keep an eye on those mortgage rates.
Uh-huh.
Explore new solutions like modular construction.
Right.
And consider the changing needs and preferences of home buyers.
All great advice.
Thanks for joining us on the Deep Dive.
It's been a pleasure. We're singing Shrefton.
The Wire has been brought to you by Resora. Elevate your real estate marketing with Resora. Effortlessly design, manage, and automate stunning email and social campaigns with our intuitive platform built for real estate. Say goodbye to complex marketing. Get started with your free account today at razora.com. And buy Notebook LM by Google. Unlock the power of your information with Notebook LM. Upload your documents and instantly access an expert AI that answers your questions, summarizes key points, and generates insights, all based on your specific sources. Become a knowledge master with Notebook LM. Try it now at notebooklm.google.